There were mixed fortunes for global share markets in July, as improving economic data was considered against a fairly uncertain outlook. The Australian market continues to tick along nicely, again displaying a willingness to look through the recent COVID disruptions in the eastern states. Share markets across developed regions also closed the month near record highs, as strong earnings, particularly in the US, continued to drive performance. Emerging markets, however, fell sharply, as Chinese regulators increased its scrutiny across both tech and educational sectors in a quest to tighten its grip on anti-competitive practices and education affordability. We also saw bonds rally in July, as yields steadily declined throughout the month, signalling concerns that economic growth could be peaking or possibly even contracting as the Delta strain continues to hinder the recovery plans of certain economies, including Australia. Aside from COVID disruptions, inflationary fears have been one of the key catalysts in generating market volatility this year. And after the recent jump in prices in the US, there was certainly some anticipation surrounding the release of the quarterly CPI numbers in Australia last week. Yet once again, the result was somewhat unremarkable. While the jump in headline inflation might look alarming on first glance, the year-on-year figure of 3.8% for the June quarter was broadly in line with market expectations, and a direct result of the abnormal circumstances we saw 12 months ago, where fuel prices collapsed and childcare fees were waived in response to the pandemic, both of which have been reversed today. In managing its monetary policy, the RBA will also consider the level of core inflation, which essentially excludes some of the more volatile items in the headline number and ultimately provides a better indication of the underlying trend in prices. As we can see, core inflation measured only 1.6% for June, which is still well below the RBA's target range. And given the worsening COVID situation in New South Wales, the RBA likely have enough reasons to maintain its accommodative policy into the foreseeable future. Thank you for watching. For a more comprehensive market wrap, please visit the Capital Partners website.